Hi everyone, welcome. We're just going to wait for more people to join and then we'll get started briefly. All right, I think it's now 4 o'clock. Let's get started. Hi everyone, welcome. This is a Troygold webinar. We're going to talk about our new business accounts. I think it's called the Troygold Prime accounts, and for short we call it the T Prime accounts. Just briefly, we're going to, for those that are watching, we will send an email out after this, and we're going to we'll drop a PDF of the brochure that we send out to clients as well. So you'll get a brochure that you can have a look at. But it's really great to have everyone here. We have a great turnout, so we're excited. We should definitely have a few more of these. So with our upcoming product releases, we'll try to do a few more, or if there are any good sessions. So I'm Dane. I'm the CRO and one of the founders of Troygold. So I just want to welcome you guys. And again, just thanks for the awesome support we've had. I see some names here that we recognize, and we hope you've enjoyed our service. We try our very best to make it as elite as possible. So thanks for the support. Let's jump in. I'm going to share some slides quickly. I'm trying to keep you guys busy for 15-20 minutes max to try and get it short and sweet. So let's see where we are around timing. So hopefully max 20 to 30 minutes with questions at the end. I'm going to share my screen, and I'm going to ask you just to let me know if you guys see a presentation. Cool. All right, so we're on. Okay, so Troygold Prime, as I said, Troygold Prime are the business accounts for Troygold. And effectively, I think the question is, why did we create it? First off, it was just high demand. A lot of our customers, a lot of our clients asked us for, something that can inflation hedge themselves, but for their business, for example. And obviously, gold is the best inflation hedge. So I think in South Africa specifically, businesses, which are the drivers of your production and your revenue, if you have a business that's in South Africa, that's prone to South African laws and regulations, and specifically the rand, we wanted to give businesses, SM businesses away, and specifically SMMEs, private businesses, a way to inflation hedge their treasury function, their business. So we call it a zero inflation or inflation hedged gold-backed account for your business. Okay, brilliant. So I don't want to take this too long, but we've had a few requests around just a little bit of background on the macro side and gold side. So short and sweet, before we get to the actual accounts, I'm going to run you through just some interesting info. Money evolution in South Africa has been quite an interesting one in terms of economics and economic history. But short and sweet, this was actually the first paper currency that was issued in South Africa. It was called a Riksdollar or a Rijksdollar, and it was issued by the Dutch East India Company in the 1700s of the Cape Colony. Now, at that stage, it was circulating with other gold and silver coins from offshore nations, the British sovereigns, and effectively, the Dutch East India Company hand wrote these paper Riksdollars out because they didn't have enough Riksdollar coins. So effectively, it was again a nation or an entity that wanted to spend more than the gold that they actually have. These Riksdollars were effectively or were eventually heavily printed. They were badly devalued, and they went out of circulation because their value went to zero. You guys might know the Zuid-Afrikaanse Pond or the Zuid-Afrikaanse Republiek. So the Pond, the ZAR Republic, issued under President Paul Kruger on the left. That was between about 1892 to 1902. And again, it was based on the British pound because the British had taken over the Cape Colony, and that was sort of the prevalent monetary type in South African history. But it's interesting to note that the 1800s in South Africa, if you asked somebody that ran a business or lived in South Africa about inflation, they had no idea what it was. Prices were stable, and actually they decreased over time. There was a natural deflationary effect. So 1800s and 1700s South Africans did not understand what the word inflation was. On the right, we have a SARB reserve note, and the SARB was created. This is also the South African pound. Many of you will know that we were, obviously as a Union of South Africa, there was the British pound, and we created our own South African pound that traded alongside the British pound. Now, we were on the gold standard up until about 1933. After that, we went off the gold standard, and prices started accelerating upward. What was interesting was that businesses, just want to check if everybody's seeing it, that businesses saw the inflationary effect on their revenues, and they thought it was a really great system, no gold backing. But very shortly, they started seeing the delayed but rapid increase in costs that inflation brings about. I think that's the danger. So in 1961, we obviously know the rand, and rand came about when we became independent, became a republic. And this is now an example of the SARB's 5 rand note that was issued. The interesting thing here that people don't realize about the rand is that it was effectively a nationalized currency. We gave one entity the monopoly to issue currency and money in South Africa. It was not backed by gold, and effectively it's backed by the faith that the guys that have the monopoly on printing this just don't print enough of it, or just don't print too much of it, and that the rate of printing is relatively stable. But naturally, the problem is with nation states and centralized entities. They obviously want to spend more than what they actually have. So, interesting experiment, fiat currency backed by nothing, but it gave rise to this effectively. And this is now a graph that we put together. It is the M2 Rand money supply versus the Rand gold price since 1971. And this is the reason why whether you're an individual or whether you're a business, you want to hedge yourself against the fact that this nationalized currency is printed at an increasing rate or an inflationary rate. So from 1971, when the world went off the gold standard, the gold price was free floating, and it was $26 an ounce back then. And today, I think we are now at records. I think it's 42,700 Rand an ounce. The key thing here is that the Rand since 1971 has lost 98% of its value against gold. So gold has effectively been the economic constant and is immune to the money printing presses of the Rand. That's what history has taught us. So maybe just in terms of numbers, and which is what we understand when we put money into a bank account. If we take, this is now just gold versus cash in the bank. If you had treasured your savings or your business's surplus funds in a bank account versus in a money like gold outside of a bank account, what would the effect have been? So this is from 2000 to 2022. We did a study on the annual remuneration or yield that you would have received on your funds. So when you placed it in a money market fund or a savings account or a bank savings account for your business, it would have returned about 6% per annum, which is effectively South Africa's long-term inflation rate. Right? In real terms, it's about 0.8% per annum actually. However, if you had treasured your funds or your savings in gold, you would have earned 15% per annum. And the difference, if you take out inflation, is about, on real terms, 3.8%. So you earn 3% more per annum in real terms if you store your savings or your surplus treasury funds in a gold account rather than simply in a savings or a money market account. And that is the crux of why we created gold-backed business accounts. It's one thing to hear about inflation and learn about gold's inflation hedging properties, but it's another thing to actually see it. So just out of interest's sake, here's a common basket of goods: milk, bread, cigarettes, six-pack of beer in South Africa on the left-hand side, and also on the left-hand side. And we looked at the prices between 2008 and 2022. I'm just going to see if you guys can actually see. Okay, because I'm looking at a presentation, so I'm hoping all is going well. Maybe if my team can message me if anything goes wrong. But you would have noticed that in Rand terms, the price of this basket of goods effectively doubled in that period between 2008 and 2022. However, when you price everyday items in gold, on the right-hand side, you would have seen that if you price them in ounces, things actually got cheaper, and they got cheaper by a factor of about 50%. Right? And the reason being is that naturally things should get cheaper, like in the 1800s, because of technological advancements in production. So the more we, innovate in production, the cheaper everyday goods should become. So it's unnatural to have an inflationary effect on your items. Now, this is from a consumer's perspective, and also, interestingly enough, the all share index, so the basket of shares. We tend to put our savings in an index tracker or an actively managed fund in the equities market. And if you looked at the pure numbers, you would have seen that it went up 144% in that period. But it actually got cheaper by 49% if you priced it in gold. And that means that it's illusionary growth in the share prices. And effectively, it's even though you're taking additional risk, it gets cheaper when priced in gold. Almost done with a macro little picture, but happy to discuss afterwards as well. The key issue that we have in South Africa right now is a debt game. Governments print money and inflate the currency and devalue the currency when there are debt shocks. So when they have too much debt on their books, and the tax revenue, for example, like in South Africa, has been maxed out. They can't really add additional taxes. They can't squeeze out more tax from the tax base, but they need to keep spending. They need to keep spending, whether it's on social grants or whether it is on their own ideological requirements. So since 2008, we've seen both developed, G6 type of economies, as well as South Africa as an emerging economy, just accelerate the rate of growth in their debt, government debt as a percentage of GDP. As of last year, we had in South Africa 75% debt to GDP ratio. Now, the scary thing about that is that it's actually short. I think that's now the second biggest interest on this debt. Interest on the South African debt is the second biggest item in our annual budget. So interest rates are important for this very fact. And the key question is as a house view, I think from an economist view, we said, okay, well, what do the smart minds think about what's happening in South Africa? Most of you are familiar with Davie Rudd from the Efficient Group, and he actually had a great presentation on the latest budget. And he talked about a possible scenario in South Africa, a financial crisis, which has been very common in economic history going backwards. We can talk about in 1994, the Mexican peso crisis. In 1997, the Southeast Asian Thai baht, Thailand, the Asian tigers crisis, where they effectively had to devalue or re-rate their currencies overnight by 30 to 60%, and people effectively lost 30 to 60% of their savings overnight. But what Davie has talked about is that if state debt increases more, and coupled with South Africa's political positioning, there is a scenario that could play out where effectively the rand will bomb out, and what that really means is balance sheets will obviously be stretched, specifically the banks, because of the inherent risk then in the system. Foreigners will sell bonds, so the yields will bomb out, and if yields bomb out, then the debt becomes more expensive as well. SARB will raise short-term interest rates sharply to try and effectively mitigate the CPI increase or the inflation increase. And ultimately what that means for us as a country is that our GDP collapses. Right? Obviously I think we are positive around what the private sector and what these non-state solutions are being created by everyday South Africans and businesses in South Africa. We talk about solar, and it's actually a very, very apt example because Eskom is a nationalized electricity supplier, just like the rand is a token of nationalized currency in South Africa. So, what we're trying to say is maybe one should look at both in your personal individual capacity, but also from a business capacity, instead of using just Eskom's electricity by way of the rand, look at maybe solar and private-based gold standards. So the gold-backed business accounts of T Prime is live, and I just wanted it is nascent and it's obviously very new, so bear with us. There will always be teething problems, but it's an exciting development. So it's reliant on three pillars, and this is what we basically allow your business to do. Is number one, you can operate within South Africa, and instead of immigrating internationally yourself, you can effectively immigrate financially or bulletproof your South African business to the slide of the rand, right? So for that to happen, we need to have sound financials on a business, which means number one, the business needs stable savings. And in our world, it does not mean rand-based savings in a South African bank. It means gold-based savings in a vault. Number two, on that savings, we want to provide South African business quick and efficient credit. So healthy borrowing against a secured asset, which means not unsecured credit and not high rates, so prime link credit. So number one, easy, fast, really cheap gold savings for a business. Number two, prime link credit for that business where it doesn't have to rely on lengthy bank credit committees to okay a line of credit. And number three, and this is probably our most exciting product right now, is where you can actually earn with your gold. So effectively a yield on your gold or an interest rate on your gold that we're working on. And how that works is effectively you can allocate a portion of your gold savings into leasing market. And we basically lease the gold and pay you an interest rate on gold. So gold on gold interest. It's not live yet soon, but we are, if you would like to sign up for the beta program that we'll be looking at working on in May. So we're looking for about 10 early clients to run a beta program for our gold interest product. If you want to sign up for that, just drop us a line. But that's going to be, I think, this is effectively replicating what you could get in your Rand bank account, but for a business in a gold bank account. I'm quickly going to just pause here for a second and see if we have any. Okay, so just want to check if everyone's still hearing me and can see the presentation. I'm not running ahead of anything. Okay, great. Okay, let's get into the product quickly. All right, so the gold. The gold is 100-gram bullion rounds, right? And I think it's best that I explain it with the sort of the metadata on the right-hand side. And I'll explain in a second why it's bullion rounds, 100 grams bullion rounds. So 100 grams is effectively 3.215 troy ounces. So it's effectively 3 Kruger rands if you want to have sort of a reference. It is 99.99 or 99.99% purity, right? So it's the purest that a refiner can take it up to. And how these bullion rounds work is effectively once we smelt bullion into a round format, and then it just gets stamped with a unique serial number at the top, the Troy logo, and the partner refiner, which is metal concentrators at the bottom. Right? I'm going to just quickly show you a replica. Okay, so this is a replica coin. It's 100 grams. It's basically with a thickness, it's about 3 Kruger rands. Now the question is, why did we, why bullion round? Why 100-gram bullion round? And the answer is that we wanted to create a solution that was the cheapest bullion in South Africa. Now, in order to do that, we needed the right partner in terms of a refinery that could create a round very cheaply. So this bullion round gets smelted, the round gets created, and a stamp runs over that. So the cost of producing it is light touch and very, very low. It also means that it can be resold back to the refinery with a buyback guarantee instantly, right? So it is the cheapest gold bullion that you will get in South Africa if there's not VAT paid on it. So effectively, the spreads on a Kruger rand, they are higher because there is a premium that the South African government and the SA Mint adds to the production costs of a Kruger rand. And this is effectively, we've stripped out a lot of the production costs, and it's this. You'll see shortly in the pricing, the spreads are the lowest that you'll get in South Africa. So in terms of a bullion product, if you are VAT registered and you do get approved on the DRC direct reverse charge rating, then this is, with no VAT, the cheapest bullion product in South Africa. We actually went to the regulator and this was a great new tool that I think we were really lucky to work with the Metcon guys on. Just some by way of shedding some light on metal concentrators. They are situated in Johannesburg and Cape Town, and they're actually the largest private refinery in South Africa. So they're a long-standing, large refining house. I think they were established in 1989. So we went to them and said, how do we create a great product at really low cost for South African businesses with instant liquidity? And this is what we came up with. So it is, it's the sort of the best priced bullion in South Africa. The origin is in South Africa. It gets produced in metal concentrators, and that is next to the OR Tambo airport in Johannesburg. It gets produced there. It's also nice. It's really nice that the vaulting space is with Brinks, just like our Krugerrands, and it's fully insured with Lloyd's. So what that means is, they're both situated in the same special economic zone next to OR Tambo. So it's all in one place. There's no movement of gold, and it's probably our most secure setup when it comes to gold. So we've got full security and trust on world-class providers, and then we use RAM hand-to-hand couriers to move it around if you take delivery of it, for example. So that's our secure storage side. Just in terms of the full title, this liquidity works very similar to the current Krugerrand based. Every round gets stored in actually 3D printed casings like this in the vault, and each one has a unique serial number. And you get the same sort of, for your business, you'll get a ownership certificate like you do on the current scenario. We do also get audit reports from the joint Metcon auditors. That's in our plans for sort of a quarterly review. So effectively, you have two sets of security under that. People have asked us around accounts and pricing. Obviously, this is a new creation in South Africa, and we've tried to keep it low cost, but also reward those that are sort of a larger customers as well. So there are three sets of accounts, and it goes based on holdings, or three sets of pricing. Sorry, one account, T prime account, three sets of pricing, and it goes based on your actual gold holdings that you've acquired. So less than 100 grams, between 100 grams and 1 kilogram, and then larger than 1 kilogram. Now the buy price, for example, ranges from spot +2 to spot +5, and then the sell price is flat standard spot -1. So effectively, the more you buy, the smaller your spreads are, and the more rewarded you are. But again, these are in terms of gold bullion, these are really low spreads, and we've tried to keep that. We've tried to keep that cost efficiency in there. In terms of facility, I mentioned a prime link facility. Now the current estimates are depending on volume. So the more you have, the cheaper you can borrow against your gold at, and it ranges from prime +2 to prime +5. There is a storage fee, obviously, because we're working with metal concentrators and it's physical gold. There is a 0.08% per month storage and insurance and safekeeping fee on the account. I think the important thing to maybe note here is that when we do have with the interest product or the leasing product, then that storage fee on the allocated gold that you allocate towards that would fall away. Many have asked, I think, on some of the responses, and thank you again for, what are the tax implications around gold, and how would it work in a business? Now, again, we caveat, we are not tax planners, we're not a tax house, so you would have to check with your accountants and your tax specialists at all times. But there are two taxes, as we note, related to gold in South Africa and gold bullion. So I'll just run through it quickly. But this is an after-tax purchase, right? So the point is that when you have surplus funds or revenue or treasury funds and you're treasuring your business funds, that's after tax proceeds that you would be allocating to in the bank or to gold. Or divvying it out. So this is an after tax proceeds. You would, if you do sell the gold, then there is a CGT component usually on if there's an increase in the price. And then in terms of VAT, so Troygold is a VAT vendor, and if you are not a VAT vendor, then I looked at that spot pricing that I just put on the previous slide. If you're not a VAT vendor and you're buying from us, then obviously we charge VAT on the production of it. However, the spreads will still be the price you sell it back at us will also include VAT, or it should. So the spreads should remain the same distance, but whether you are a VAT or non-VAT vendor will make a difference. So we would urge, VAT. It's better if you're a VAT company. That being said, for a VAT vendor entity to acquire the gold without VAT, you have to become part of the DRC system, which is a new SARS system that was issued in South Africa about a year ago for companies in this VAT gold value chain. We do, as part of the onboarding process, apply to have you as get a DRC recognition, which means you should be able to acquire the gold without VAT. But there are certain requirements for you to acquire it without VAT, but effectively you're still looking at relatively the same spreads. All right. Just quickly, we've had some calls and some great discussions with some of you, and the question was, how do I create a T Prime account as well? So you can go into your same profile. This is just a web app example, or you can go on your mobile app as well. You can just tap on your profile, and there is an option that says create a new account. So create a new account. It'll take you through to the sign up page, and you can have a choice there between personal or business. Tap business, hit next, and then there is an onboarding flow. So obviously with any account that gets created, there is a sort of a KYC or KYB, or know your business, know your customer flow, where we have to take the relevant documentation to basically file. You have on file that you are a registered business, that you have your CIPC docs are in order. So you're going to you will say there if you're a VAT vendor or non-VAT vendor, and then you'll supply us with the relevant statutory docs so that we can onboard you, create the account, and if you're a VAT vendor, we can also check if you can be part of the DRC program that would allow you to buy it without VAT. But both solutions are great, and I think this is something we sort of we've put out in the market, and we haven't spent a lot or pushed a lot in terms of the marketing quite yet. We wanted to penetrate into our own database of users and just start testing and start getting it live. So we've had a few great signups. We've had our few first transactions happening already, and we're really just grooving the system. So it is exciting. I think there's been a very prevalent example of this actually last week. If you guys have seen the MTN results, where MTN made 20 billion rand in profits, and then the devaluation of the Nigerian naira just wiped out 20 billion rand. So I think similarly for South African businesses going forward, you might want to have the option of storing some of your earnings and your surplus funds, not in the rand, but in gold. So we're making that possible, and we urge you to drop us a line or get in touch with us if you want to speak about it or need any assistance in opening it. I want to open it to the floor for Q&A. So that's it from our side. Like I said, we'll send through the standard brochure that we've got. Really excited to see what sort of feedback you guys have on the product, and exciting developments. So just sharing. Okay, great. So it's Q&A. If you do have any questions, please drop it on the chat there. I do have my my team's standing ready. I think while I'm waiting for that, I'm going to go through some of the questions that were sent through to us. So give me a second so I can get to that, and I'll run through it. So, okay, so one of the questions, and the good question was, would this initiative be applicable to all types of businesses, and would it include trusts as well? So yeah, so it's open to all business entities in South Africa. We haven't created an account creation process for trusts. So at the moment, it's like I said, it's for SMMEs specifically. So it's I think it's TCs and PTY limiteds. One of the questions was how to use Troygold. Okay. So is there a minimum investment amount? So very much like our personal accounts, there is no minimum investment account, no minimum investment amount. So you just fall into one of those three slots of gold holdings. There's a question around, because of the low risk nature of gold as collateral, do we foresee interest rates moving closer to that of home financing or mortgage type financing in the foreseeable future? So yeah, I mean, the credit we provide, we get credit from wholesale providers and non-bank institutions, and then we pass it through in terms of the credit facilities. The larger we become, the better rates we get from our wholesale suppliers. So we've been trying to get cheaper credit and then obviously pass it across through to our users. So I think it's a great question. We wanted to function like an access bond for your business. That being said, I think there's still a way to go to get us to the prime minus or the prime scenario of credit. But it's an important question because we want to, even though it's very fast credit and there's no credit committees on that, and it's not unsecured. You want it to be really low so that you can utilize those funds in your elsewhere, sort of that financial engineering side to it. So we think it's pretty cheap at the moment, but the larger we get, the more we're going to, as a community, get cheaper funding, and it's going to get closer towards prime. Someone asked about the income option, which is, like we said, I think we are, in the brochure, etc., we talk about it coming soon. We are looking to put a beta group together of about 10 businesses to actually just run that leasing interest model, and that will provide us, a good test batch and a good test base that we can open it up to the broader T Prime community. Another question was, what are the charges of the account? I think we've addressed that. Is there international currency involved here? So this is a rand-based account for South African businesses. Let's quickly have a look here. Will we be able to download transactional records, statements, etc.? So yes, it works exactly the same. You have in your account, if you log on to your web browser or your mobile app, you can export via CSV or Excel your transaction history and your records of each transaction. So if you require it, it's pretty seamless. Another good question was, gold price and exchange rates are volatile. Does the business accounts not increase business risk? So yeah, I think this is obviously if you are, as a business, opening a T Prime account and you're allocating or treasuring surplus funds into that, the risk you're taking on is rand gold price exposure. So the component there would be gold USD, the gold US dollar price, and also the dollar rand price. So if you are comfortable with, so you have to weigh up two options. You have to weigh up, am I comfortable with the gold dollar and the rand dollar components and being exposed to that risk? Will they increase? Will they decrease? Will they be stable. Obviously, historically, gold has been, like I've shown you, has been relatively the stable store of value, especially in rand terms. But you'd have to compare that to the risk of allocating it into a cash in the bank. So I guess a cash management account for your business. Now, there you have certainty around the interest rate that you'll be earning, but it's still the uncertain element there, the risk element there is what will the inflation rate be on that surplus funds. So you're exposed to rand inflation on the one side and the bank's credit risk on the other side. On the other side, you have full legal title of the gold, so you're not exposed to our credit risk. It's only the gold US dollar and the rand dollar exchange rate, and you have to weigh up as a custodian of your company's funds which set of risks and exposure to those risks you are allocating what percentage of it for. I think it's important to note that why this is new and different is previously you only had really an option of let me stick my business money into inventory stock, maybe divvy it out, or into the bank. And I think we're adding another option. I think optionality for business owners are key, and it's specifically something that hedges against inflation. All right. I think that's it from the standard ones. Okay, so I'm just curious. I think St. Jones asked us about the elephant in the room, CBDCs. Those are central bank digital currencies. Well, I think money at the moment, I think money supply, other than M0, the cash base, is effectively 90% digital at the moment. So, the question is, would it really change much if central banks put it on a token and issue that to us? They'd have more programmability on their money, but I think it's still electronic money. If it's nationalized in the hands of a monopolist, then they do have the ability to decide the supply of it. And obviously, that is inflation. So the definition of inflation, or the narrow definition, is the increase in the supply of that monetary base. Right now, that monetary base is only the South African rand. We used to be a gold standard where that monetary base was gold, or as good as gold, because the paper was backed by gold. We don't have that anymore. And it's only been an experiment in the history of the world for the last 80 years. So the odds are that the world will start producing competing currencies and private currencies, and gold is most certainly going to be a cornerstone of that. So CBDCs, to protect yourself, obviously just try to use less, I guess, Eskom power, or try to look at some alternatives. I think we're just trying to be one of the alternatives. There's a good question here. When you're paying off big asset loans in ZAR, would it thus be more beneficial to store excess payments in gold, paying off in a lump sum after a period? I think the question there is, again, it's a treasury question. So what risk are you wanting to expose a certain amount of capital or value towards? If you have a loan that you need to pay off, if you got 100,000 rands loan you need to pay off, or 1 million rands loan you need to pay off, and you actually got those funds, the question is, do you want to just keep that nominal amount certain and put it in stick in the bank and just know that you'll always have 100,000 rand, or do you want to expose it to? Do you want to have exposure into the gold price and sort of stabilize your value? Now, your loans, because they're denominated in rands, because there's inflation, will tend to get cheaper in real terms. So yes, there is a play here where if you're storing your value in gold, in real terms, it should increase. Like we said, I think historically over the last 90 years, it's 3.8% a year versus cash in the bank at 0.8% a year. And that's, by the way, there's a report called Long-Term Perspectives by Old Mutual. You can go and have a look at it. It's a great yearly report that puts these numbers out. So yes, there's a play where you can, treasure your those funds in gold, and it should increase in real terms, and your debt, which is rand based, will should devalue. But again, you are taking on risk. You're taking rand gold exposure risk, and you've got credit risk on the other side that you have to repay. So it depends on what you're comfortable with, and obviously the quantums and the numbers. But you might be comfortable with on a smaller loan taking that, or you might say, I'm going to actually go for that, make money on the one, or retain real money on the other, and let inflation reduce my debt. Just one day, on this will also be substantial because both accounts hedge against inflation. Robert, you have a great question. You have the benefit for non-business owners. Both accounts hedge against inflation. Yeah. So both accounts. I think if I'm correct, it would be for the individual accounts and business accounts, because they're both bullion and gold backed. They would. That is effectively what you're leveraging the power of gold for, is to hedge yourself against inflation. So it's just I think the difference is that your business is usually a productive engine, and can you utilize this account, which you can to stave off some of the price increases in your input costs. Some Lowe's asked around the storage facility. Usually it's obviously in terms of the vaulting and the Metcon facility, it's really high security. So it's the highest type of security facility in the country. I'm not sure if visitors can go in. Well, nobody can really go inside other than the vault operators, which is why it's a secure facility. We can't just walk into the vault and go and see the gold. There are checks and balances, but I think clients, there might be a scenario where the business park can have clients and you can possibly see the building. But I caveat, I will have to get back to you guys on that one. But it's a great question. Will offshore branches be able to deposit physical gold to be used in this account? I think at the moment, this is because it's so new. It's not an upload account. It's not sort of as yet. It's not an upload account. I think the first batch or the first phase of this account is just the acquisition of the gold and metal concentrators producing it and storing that. So there are no deposits quite yet as it relates to the business account. Sonia asked us around spending from one's gold holding with Troy. The mechanism is obviously leveraging your gold or gearing it and utilizing the facility against that, where you can spend against your gold. We are working on a product where you will have the ability to, if you're using the Troygold card, to swipe your gold as well. So you can swipe your facility credit, or you can actually swipe your gold. So some people don't want credit and they want to just be de-randed and sit in gold and then be able to swipe that. I think we put out a nice coffee video the other day in Cape Town where I've gone ahead and used that. I use it often, but we want to give you the optionality to use both. Use your credit facility that's gold, that's backed by your gold holdings, as well as just pure sort of gold standard spending your gold. But you can obviously withdraw your credit facility or sell your gold if you want the proceeds outside in your external bank account. Otherwise, you can utilize your MasterCard. Let me just have a look at the. I'm missing any great other questions. So have a look. Urs asked us around the gold and gold interest. So we haven't quite set the, like I said, the interest is a coming soon product. We haven't quite set the interest rates for that yet. It's going to be something that's going to come out of the beta program with metal concentrators. So to be determined. We're going to look at the levels of that and what makes sense, obviously, for all the participants in the chain. but it's definitely an exciting option. We can't give a nominal number at this time. I think one thing is important to note is that with gold, your interest rates are because gold does not have inflation. You have to take out that inflation figure that's baked into interest rates in South Africa. We have a inflation premium inside our interest rates, which is historically about 6%, but I think anybody living in South Africa knows that the basic, the main things that the main input costs for your household or your business is not 6% inflation, but if you're earning 8% or 6% or 7% at a bank, you should compare that minus 6%, 7% interest rate to the interest rate that you'll get in gold. So gold interest rates on a nominal basis look low, but it's because they're actually real rates. So when it comes out, just be mindful of that. All right, I think we've taken almost an hour of your time. So thank you very much. If there are any questions still, please drop it. Like I said, we're going to be sending you an email with just PDF attachment of the brochure. Have a look through it, and you'll also have the option to sign up right there, and one of our team members will call you to assist you in your specific case. If you have any other questions, please drop us a line as well. Yeah, we're on the other side of the application. So just wanted to thank you all for your time. Thanks for really appreciate the turnout. It's actually a great turnout, and again, awesome. Thank you for your awesome support, and we look forward to working with you guys on the new accounts. Thanks, everyone.